The views, comments, and opinions of the following program do not necessarily reflect those of Morris Media Studios, MorrisMediaLive.com, or its affiliates. Listener discretion is advised.
Yes. Good afternoon, everyone. How is everyone feeling on this Tuesday, March the 16th? I'm your girl, Shirley Nichols, with Mortgage Money with Shirley. You all, this is our first debut episode, so please tune in. We will be coming to you live and direct every first and third Tuesday of the month. First and third Tuesdays of each month. So this first episode is Mortgage Matters with your girl, Mortgage Money with Shirley. Okay, so I thank you all so much. My first podcast debut. Yay! It's all things mortgage because mortgage matters. And we're going to jump right on into this segment. Right before I go into the segment, though, I do want to let you know we are live and direct streaming from YouTube, Morris Media Studios. So be sure, if you're not there yet, get there, bring a friend. We are on Morris Media Studios and my Facebook business page, Clear Sky Mortgage and Realty. Clear Sky Mortgage and Realty, and I will be also sharing that to my personal page, Shirley Nichols, on Facebook. So that's our social media handles, Morris Media Studios on YouTube. And if you have questions and you want to call in on today's segment, feel free. You can call in at area code 323-815-4204. Again, that's 323-815-4204. We will be taking calls later on in this show. So again, tune in. If you're watching the replay, that's fine. Go ahead, text, DM me, ask the questions. I'll watch the replay and I'll be able to answer your questions. Okay. All right, let's go. So I want to jump right into a little bit about taxes when it comes to your mortgage, because mortgage matters, right? And I often get these questions of, am I too old? Do I really need a house? Is now a good time to buy? It's always a good time to buy a house, okay? Let's just say that now. It is always a good time to buy a property. Now, are sometimes better than others? Sure, with anything in life, sometimes it's better to buy now or better to buy a little later, but it's always a good time to buy. So I say the taxes, right? Your income taxes, because we're into the tax season now. And I know many of you all are filing your taxes, which is a good thing, right? Because tax deadline is coming up. So if you own a property, okay? If you own a property and you are paying a mortgage, this is for you. Write off that mortgage interest and or the points you may have had charged to you when you were refinancing or buying your house, right? Okay, so what am I saying? Shirley, what are you saying? So on your income taxes, on your returns, your 1040 individual returns, you can write off that mortgage interest. That's why mortgage matters. You can use that interest, okay? So if you're itemizing on your Schedule A, if it's your primary property on your Schedule A, you will be able to deduct that mortgage interest you've paid for all of last year. And if you've refinanced or you bought a property and your loan officer said, well, it's going to cost you a little bit of money, right? A couple of points or a half a point or a point to buy this property or to refinance this property, that you can charge off or deduct off of your taxes as well. So Shirley, where do I find these points or this money that I paid for when I bought this property or refinance? So if you look at your closing documents, right? So whenever you refinance or you buy a property, your loan officer or the escrow officer will say, here's your closing documents, right? So in those closing documents, there's something called a loan estimate or a closing disclosure. We call that the CD or a loan estimate, an LE. So you're looking for the closing disclosure or your CD in those closing documents. And right somewhere at the top, You might have skipped over it, but somewhere at the top, it'll say loan origination or points, right? Loan origination and points are the same thing, same lingo, same language. And that's the number that you want to give to your tax professional, okay? Or if you do the taxes yourself, that number there is what you want to put on your Schedule E. That's the part of the loan origination or the points that are tax deductible, okay? Mortgage matters, right? And then if you already own your property and you've been paying your mortgage, month after month, that same lender, whomever you're with, that lender will send you out a 1099, something that will show you how much interest you've paid for that year. Okay, that document is very important that you want to make sure you look and it'll say interest paid for the year. It's real simple. And you put that on your taxes, right? Now, for those of you who are real savvy and have rental property or investment property, same thing goes for you too. But you'll claim that interest, you'll claim the property taxes, you'll also claim the homeowner's insurance, you'll also claim depreciation and other expenses. You'll claim all of that stuff on what's called a Schedule E, right? So on your on your income taxes, same 1040 form, you'll look for the Schedule E and all that stuff that you've done on your rental property, the interest, the property taxes, the homeowner's insurance, the depreciation, the expenses of whatever you paid, all that stuff goes into the Schedule E, right? Mortgage matters. That is why I say to you, being a homeowner is something of fruitful. And it always comes out in the wash so that you have things that you can claim monies for, make monies with. That's why mortgage matters, right? It's tax season. Make sure you're doing what you need to do on your income taxes, okay? On your 1040s so that you can make sure you get the most bang for your buck. I know a lot of the times I get those questions, Shirley, why do I have to pay points? Why do I have to do this or why do I have to do that? I don't want to pay all this money to refinance or buy a house. But guess what? You're going to get some of that back. Just hold on, okay? But buy the property, refinance the property. Don't let those points and other fees discourage you. And since I talked about the fees, well, I know a lot of you always have these questions about, but I always see these commercials, Shirley, that say something like, there's no fees to refinance. There's no fees. There's no cost. Okay, there's always a cost. There's always fees. You, homeowner, new potential purchase buyer, homeowner, you may not know this and you may not see it, but it always comes down into the rate. And don't worry, because again, guess what? The interest you pay on that rate is what? Tax deductible at the end of the tax season. So don't worry about all those fees. Oh my gosh. But, shop around if you're a fee shopper, but shop around. So let's talk about that. Shopping around. Is that a good thing? Is it a bad thing? Well, let me ask you this. If you went to Nordstrom's and you were going to Nordstrom's for a specific shoe, let's say you were going to Nordstrom's to buy a pair of Gucci's. Are you going to go from Nordstrom's to Bloomingdale's to the Gucci store? Or are you going to go right to where you can get the shoe that you're looking for? You're going to go right to the store and get that shoe that you're looking for, right? Now, you may have to shop around if that shoe is not there. But chances are, if I'm a frequent Nordstrom shopper and I know they carry all the Gucci's I need, I'm going to go straight to Nordstrom's. So I know that's a kind of a strange comparison when it comes to shopping for home mortgage rates and things. But if you think about it, most retail stores, whether it's Nordstrom's or Bloomingdale's, they're going to have just about the same type of shoe. Same thing in the lending world. We're always going to have about the same type of interest rate or fees. We really are. But it's what you know and who you know and how you get things done that matters. So if you're going to call Shirley and say, hey, Shirley, I'd like to buy this property at 123 Main Street. Can you do the financing for me? I'm going to say, sure, let's talk about it. Let's get it done. And then I'm going to go through the steps and the motions to show you what we need to do to get it done, right? Now, am I the cheapest interest rate out there? Am I the cheapest in fees? I'm going to say about the middle of the road. But that's because you trust me and you know that I know my stuff and I'm going to help you get it closed at the end of the day. Versus I'm going to shop 2-3 other internet loan officers and hope they can do the same thing, right? I cannot tell you. First of all, I'm sorry, let me go back. I've been in this business for over 25 years. Again, my name is Shirley Nichols. My NMLS number is 105989. Why did I stop and give you that plug? Because I need you to know I know my stuff and that you can call me and I am licensed. Okay, I'm not on the internet where you just Google my name and, oh my gosh, this is the first person I saw, I'm going to call her, right? No, you're going to call me direct because you know I know my stuff and I'm going to get the things done that you need done. Okay, right. So that's the first thing. But going back to the shopping business, right? So as I mentioned, you're going to go with the person that you know and trust, that you've heard a reputation or things about, that they do understand the business and they can help you get it done. I cannot tell you how many calls that I get from clients who, I was talking to John Doe or Jane Doe from the internet and they said that they never received the documents that I faxed. They never received anything that I emailed or scanned. Oh my gosh, what do I do? And now I got to close on my close of escrow date is tomorrow, right? So that's what happens when people call and say, I've talked to someone through the internet. Right? And not that that's a bad thing, but at the same time, shopping for that loan officer or that lender, calling 5, 6 different people, you kind of get what you pay for. And if you're looking for a rate, trust, we all have about the same rate. Okay? If you're looking for fees, we all have about the same fees. And remember, that zero cost, oh, there's no fees. Keep in mind, there is a cost. Now, it's probably going to be because your interest rate is higher, that they've tucked away all those fees in that. Okay, that does happen. Or it can be some kind of a promo and you have to fit this category. You have to have the 800 FICO score. You have to be putting 20% down or 25% down. You have to fit a certain category. Or what a lot of big banks like Wells Fargo and B of A will do, you have to have XYZ dollars in the bank with us. And then we'll give you this promo stuff, right? I used to work at Wells Fargo for about 12 years, okay? I got my career started with Household Bank back in Kansas City, Missouri. Absolutely love Household Bank, not a problem there. They've since went on to doing bigger and better things, and I think they've even transformed into other lending avenues. I don't hear very much about Household Bank mortgages, but that's where I got my start years ago. Over 25 years ago. And yes, and so I went on to work with Wells Fargo, Citibank, and all of those companies stand up top notch, but they're banks and they put you in a box. I'm a mortgage broker. We go outside the box and we have other lenders that we talk to and we can find a home for your loan. Okay. But again, that's about that shopping thing. So keep in mind what you're looking for and what you're going to get. All right. So we talked about tax season, right? Your 1040 individual tax returns. We talked about the Schedule A and the Schedule E. We talked about shopping around for that lender or that loan officer, okay? So I also want to go into, again, mortgage matters. So I was talking to a colleague of mine the other day, and oh gosh, like I said, being in this business, you hear all kinds of questions, comments, stories. We love the stories, right? Everyone has a story. And when mortgage matters, you got a story. So I was talking to a colleague of mine the other day, and it was just such a heartwarming, these stories I love, right? So talking to my colleague, and she says, I have just shown a couple properties to my new potential home buyer, right? And we were out looking for properties, and I kind of asked her background because she's paying all cash. Okay, she's going to look for a property in the $400,000, $500,000 range, all cash. Like, here's my suitcase, inside $400,000. Okay, so she's gonna go shopping for all cash and gonna go buy a property, right? So my girlfriend is out showing her this property, and she's like, how do you have, not that, no judgment passed, but how do you have this $400,000, $500,000 cash, right? And she goes, oh, let me tell you a little story, right? My sister, back in the 1970s, purchased a property in San Diego for about $70,000. You know where I'm going with this story? My sister purchased a property in San Diego in the 1970s for about $70,000. Well, she recently passed, rest her soul. She recently passed, and she left me her property. She left me her property. She didn't have any kids, no husband, didn't have anyone else that she wanted to leave the property to. So she willed me the property in San Diego. So my girlfriend's like, whoa, let me get this straight. She bought a property in the 1970s for $70,000 in San Diego. She passed away and she left you the property? And the customer, the buyer, goes, oh yeah, and it's free and clear. Free and clear. So guess what? That property in San Diego, over $1 million. It was over $1 million. When the sister passed away, the property was worth $1 million. Free and clear. Willed it over to her sister. Her sister now has a suitcase full of $400,000 that she wants to spend on this new property. So what happens? They find the property, they put in the offer, all cash, and boom, she's going to be getting a property. You see, mortgage matters, even back in the 70s. So how would you like to buy a property now, right now, while interest rates are low, while the economy is coming back around and it's really getting back into a tailspin of upward bound? So think about how you could purchase a property right now as well. Now, I know you might think it's a little scary. Oh my gosh, I can't buy a property. I'm just going to rent. I'm going to pay all this rent to all these landlords. I'm going to just pay rent, never buy a property. No, mortgage matters. And I'm going to show you and talk to you over these next few episodes on my new podcast, Mortgage Money with Shirley. I'm going to be showing and talking to you all the different ways and techniques that we loan officers, we loan originators, we mortgage brokers think and want to share this business with you, right? So I say that story about the young lady and having this free and clear property that she gave to her sister. It's important that you think now about the long term. You may not have any brothers and sisters. You may not have a husband or a wife or whomever you want to leave this property to, but maybe you have an aunt who took care of you. Maybe you have an uncle who took care of you, a grandmother, someone that maybe you'd like to will your property to one day. But to have this property, to start gaining these assets, to start gaining an investment of a lifetime, it's for you. Now, again, earlier in the segment, I said, I often get this question, am I too old? Am I too young? Can I buy this property? I think the myth is some of my clients are older and they're on fixed incomes, right? They get either Social Security and a retirement pension, or they get Social Security and a retirement pension, and they're thinking that's still just not enough to qualify for a loan. So they think, right? So fixed income, it's never too late to buy a property, right? We don't age discriminate, we don't income discriminate, but you do have to qualify for the property, okay? You do have to qualify for the property. Now, fixed income is a little different, but you can qualify perhaps for something. Once we go through the motion and looking at all of your income documents, we can kind of put together a plan or a strategy to see what we can do to get you qualified for or what property you could qualify for, right? Okay. Income with Social Security and retirement pension, it's a little different because there is such a thing, what we call grossed up income. Right? And that typically is with your Social Security. There is a means that you may think, but in my bank account, they only wired me $1,000 every month. That's what you get after their Medicare deduction or sometimes their tax deductions. That's what you get. But see, in the mortgage lending world, mortgage matters. In the mortgage lending world, we will show you that that same $1,000 may look like $1,100 or $1,200 after we gross it up. There are things that will qualify to gross up income that may be the fixed income like Social Security or retirement pension, right? So these dollar amounts that you're thinking as a potential home buyer that, oh my gosh, I don't qualify for this. Oh my gosh, I don't make enough money. Let us help you and to determine how do you qualify or what you do qualify for the income that you want to purchase for this property. And don't forget, we often get asked this question, can I get a co-signer or a co-borrower? You can. But we're going to also look at that co-borrower and see if they really can afford to be your co-borrower. Now, what about so my name is Mary Jane, and I'm, 72, I'm retired, and I'm on this fixed income. Can I get my son who lives in West Virginia? Can my son go on this loan with me, even though he doesn't live in the new property that I want to buy? Absolutely. We call that non-occupying co-borrower. He's a non-occupant because your son's in West Virginia, but he's going to be a borrower on your loan to help you get qualified. Non-occupying co-borrower. And that happens all the time, right? Because we do have cases where a person wants to buy a house that's a little bit larger or it's a little bit more expensive, but they're thinking, oh, I don't have that money for that. No problem. Do you have a co-borrower? Do you have a son, a daughter, an aunt, an uncle? You never know. And we'll call that person the non-occupying co-borrower. They don't have to live in the property that you're planning to buy. You see? So there's all kinds of little tidbits, all kinds of mortgage matter notes that we could give to you as your mortgage rep or loan officer to help you get qualified or to at least get you to that next level or that goal. Now, part of that, I want to go back to, do I qualify, right? You know, we get those questions. I don't know if I make enough money. I might have too much debt. So do I need to pay off debt? That's a very loaded question. Because sometimes, you might want to pay off some debt, or sometimes we will tell you, just hold on a second. Let's see what we can get you qualified for without paying off the debt. Because the more money that you have in the bank account, the more money you could possibly put down, which means your balance, your new loan balance will go down. Right? And your what we call loan to value will go down. And that also will trigger this interest rate over here, which all encompasses a lower monthly payment, right? So not real sure. Everything is a case by case of whether or not you need to pay off bills. But I will say the most troubling fact about some of our clients that want to buy homes is that they've leased a car loan. They've leased an automobile. They've leased a vehicle. Right? And that's not a bad thing. Lease all the vehicles you want. But when it comes down to qualifying for a mortgage, here's where, we kind of bump heads, right? As a mortgage lender, any type of lease, if we pull your credit application on Monday and you have a leased automobile, there's no rush. Let me go turn it back in. Let me go turn this car back in. On Monday, when we pull the credit report and we see leased vehicle, it's a little too late to go turn it back in, right? Because that's the report the underwriter is going to see. Once the underwriter gets this report, they're going to go, oh, there's a leased vehicle. And I'm going to go, no. They turned it back in. They went and turned it back in on Tuesday. Tuesday's too late because the underwriter has now seen this leased vehicle on your mortgage. On your credit report. And when they see the leased vehicle, they automatically have to count that payment, right? Whether or not you turn it back in, you got to go through a whole rigmarole slew of a process trying to get them, the underwriter, to understand you no longer have this car. Because the only thing that the underwriter thinks is, oh, yeah, sure. They went and turned back in this leased vehicle, right? They did an early termination and they turned it back in so that they can qualify for this loan. But doesn't that buyer need to get back and forth to work? Oh, but he works home. He works at home because we're in this pandemic. But isn't the pandemic going to sooner or later hopefully be over and they're going to have to go to work, take their kid to daycare, childcare, whatever, school? Or aren't they going to have to go out every now and again to dinner or lunch or to church or something? Right? They're going to possibly need a car. So that's the mindset. Over years and years, we've tried to argue this point several times. And as a loan officer, I don't know how many times we've been successful. I probably want to say less than 1%. But do understand those pesky little leased vehicles, student loans, all those things are the pesky stuff that us loan originators try to convince the underwriter that, hey, it's not so bad. This person paid off the student loan. This person turned back in the lease. And it all kind of goes into who you know and what they know and how can they make this happen and you still get in your house, right? So again, I just want to bring to you today that mortgage matters. There's so many things that we're going to talk about over these next episodes with Mortgage Money with Shirley. So many topics, so many notes, so many tidbits, and I'm here for it. I just love this business. And like I said, I've been in this business, mortgage lending, over 25 years. I will take any comments, questions that you may have at this time. Again, if you want to call in, this is just a fraction of what you're going to get over these next couple of episodes with Mortgage Money with Shirley. Again, you can call in now at area code 323-815-4785. 4204 323 815 4204. And this today is episode 1, Mortgage Matters. And like I said, we'll be here every first and third Tuesday of the month. Sharing with you what I know after 25 years plus in this business. It's time to mortgage the property, refinance the property, purchase the property. The time is now. And especially, like I said, it's tax season. And I know many of you have already got your stimulus money. Use it wisely, use it wisely. So any questions or comments, I'm here for it. And if you are watching the replay, I'll also watch the replay with you, and you can still text me. Speaking of text me, my direct phone number is area code 818-720-7575. Again, my direct number, 818-720-7575. And I'm on Facebook under Shirley Nichols, and Clear Sky Mortgage and Realty is my Facebook business page, Clear Sky Mortgage and Realty. So feel free to DM me. Like I said, leave a comment. Whatever you need to know. If I don't have the answer, I will certainly get you the answer. As anyone knows, these guidelines change rapidly, just like interest rates change. Right now, interest rates are really, really low. And I often, again, another one of those questions, what are the interest rates today, Shirley? And I'll throw it right back at you. What is your credit score today? It's like when you want to know specific interest rates, call me and let's discuss your profile. Let's discuss what it is that you want to do, whether it's to buy another property, buy a property, whether it's to refinance your property. There's all kinds of programs that we have for the government side, FHA, VA. Those are two of the big heavy hitters. With interest rates are extremely low right now, especially if you need to streamline the FHA or the VA rates. Those type of mortgage programs are plentiful. I have a lender, phenomenal lender, that just rolled out a jumbo loan program up to $2 million, where the loan to value is at 89.9%. And that's huge. Oh, I think we're getting a call. So I will get that call offline. And yes, because I told you this is my first episode, so I didn't want to jump and answer this call, but I'm sure they'll leave a voicemail and we'll answer that call as well. So if you need to again call me, feel free. I get all the voicemails and I will return your call. By the way, I am a mortgage broker that covers California, the entire state of California, and the entire state of Nevada. So let me know. And that's our time with Mortgage Money. I want to thank our Morris Media Studios on YouTube. It was where you'll find us streaming live, Morris Media Studios. And again, my social media handle is Clear Sky Mortgage and Realty. And I'll be here every first and third Tuesday of each month. Mortgage Money with your girl, Shirley.